Joining me now, Mervin Jebaraj, economist with the UA Walton College of Business, executive director of the Center for Business and Economic Research. Mervin, thank you for being with us. Good to see you again.
Good to be back on here.
All right. Before we dive into some national, international economy, economic news, I want to talk about Northwest Arkansas. First of all, you guys came out with a report early this week that the biking economy in Northwest Arkansas is having quite a significant economic impact in terms of dollars into the area as well as potentially jobs. Tell me the findings from this summary.
Yeah, I think, when people think about bicycling in Northwest Arkansas, you look at the nice mountain biking trails, road biking trails, the Razorback Greenway that connects the major cities here in Northwest Arkansas, and you see a lot of people enjoying these as amenities, as recreation, but we don't often think about the type of economic impacts that it generates. And so this report was an attempt to try to put a dollar figure on some of the economic impacts. There are economic impacts, for example, that we did not study. Obviously it's a recruitment tool for businesses here in Northwest Arkansas to be able to say, come work in Northwest Arkansas, you can enjoy these wonderful trails. We didn't try to quantify any of that, but what we did look at is sort of the tourism benefits of those trails. That is, people coming to this region ride on the mountain biking trails or the Razorback Greenway or participate in competitions in Northwest Arkansas, and estimate what the economic impact of that was, and then to look at sort of the business ecosystem around the bicycling infrastructure here in Northwest Arkansas. So there are people that make bikes, repair bikes, sell accessories for bikes, provide tourism services, either in picking up people or dropping off people, and picking up their bikes, dropping off their bikes, all kinds of different activities in this sector. We try to quantify those two impacts, and those two business impacts and tourism impacts together are $159 million last year. About 100 million of that was the business impacts. So those are, directly businesses engaged in something to do with the bicycling economy. And then $59 million was basically tourism impacts and people going to restaurants, paying for hotels, Airbnbs, that type of activity while they're visiting Northwest Arkansas, either to just enjoy a nice weekend vacation here around bicycling, or if they visited for, say, a large event like we had at the beginning of last year, the UCI cyclocross race, which in and of itself produced a $10 million impact.
When you go bike riding in Northwest Arkansas, what's your go-to? What's your favorite trail?
I am about as adventurous as you can get. So I like the paved Razorback Greenway, and I use electric bikes because those hills can be mean on my legs.
Okay, fair enough. All right, let's turn our attention to the Federal Reserve Bank. Jerome Powell, the Fed's announcing no interest rate hike this week at their Fed meeting, which was largely anticipated by most economic observers. However, there was a curveball thrown in there. The Fed say they may put two more interest rate hikes into the economy before the end of the year, which I think they'll have 4 other meetings the rest of this year. What was your takeaway from what the Fed said, and how economists and people that are involved in the financial industries reacted to that?
I think there's a general sense that there's some confusion in what the Reserve's policy moves are here. I mean, like you said, we widely expected them to not raise interest rates this time. And we widely expected them to signal maybe one more interest rate increase at some point this summer. So I think most people's expectations were no increase in June, one increase in July, and that the top rate would be between 5.25% and 5.5%, from 5.5% and 5.25%, where it is today. So the surprising thing in all of this was that while they didn't particularly put this in any of their statements, they indicated that they're pausing. They're going to be very data driven and see what the data says before their next meeting. They release estimates of where they expect the top interest rate to be, and that indicates 2 more rate increases as opposed to 1 more. So the top rate would be between 5.5% and 5.75%. which, is a 1/4% higher than where we expected it to be. And I think the confusion is that if they want 2 more rate increases, why didn't they do it one this time and one in July? If indeed the economy needs 2 more rate increases, why not raise now and get inflation under control? Why wait till July and then at some point after that? What are they seeing about the future path of inflation that we're not seeing? So I think, most estimates of, we got inflation estimates yesterday. It indicated that inflation was indeed still cooling in the United States. We're now about 4% year-over-year increase compared to where we were last year. That's, almost 5% lower inflation rate in May of this year compared to June of last year when it peaked. So, again, looking at estimates of, what economists expect inflation rate path to be through the rest of the summer, we're expecting a year-over-year increase to be in the mid to low 3% range later this summer, which is not, admittedly where the Federal Reserve wants it to be, between 2 and 2.5, but it's a lot lower than where it was last year. And if, the thinking was that even 3 to 3.5 this summer is not good enough, then why pause now? Why not increase now and increase next time as well? But I think my guess is that the Federal Reserve is trying to have its cake and eat it too, just trying to signal that they're pausing, but indicate that they fully well might increase 2 more times rather than 1 more time, that they're trying to take inflation very seriously, but not tell the markets that, oh, that's it, we're not raising rates anymore.
Yeah,
and I think the market,
maybe they're giving them the signal that we just want to know, we heard you, we hope you hear us, we're going to give you a break now, but it's not going to be the break you're looking for, but maybe you'll get a break before the end of the year.
I think the Federal Reserve's trying to say, be happy, but don't be too happy, or else we'll change our minds to the market. So, and I think that's kind of what the S&P 500 did. Right at the announcements, it went down on the idea that there would be 2 more rate increases, and then it kind of leveled off back to where it was earlier in the morning.
All right, so all of this is to get inflation under control and hopefully to avoid driving the economy into a recession. You have looked at a lot of other numbers and recently did your quarterly analysis. Do you think we avoid a U.S. economic recession?
I think, one of the big dark clouds on the horizon was obviously the debt ceiling debate. And I think if that had not been resolved in a timely manner, which it was, thankfully, and had it dragged on for a while, there was a very strong possibility that the economic consequences of not raising the debt ceiling would have been enough to push the U.S. into a recession this summer. I think given the momentum that we see in employment growth in the United States, given the fact that the Federal Reserve, for now anyway, has paused raising rates and the unemployment rate being as low as it is, I think there's a very strong possibility now, assuming nothing else changes, that the U.S. avoids a recession at least through to the end of this year. So I think you look at the Federal Reserve's projections for the economy, they've softened some of the unemployment rate projections. So they're projecting a much lower increase in unemployment rates than they were at the previous meeting. They're projecting a stronger economic growth in the United States than they were projecting at the last meeting. So I think the Federal Reserve has come around to soft landing, if you will, as well, as where we'd be in a period of lower economic growth, but not in a recession.
All right. He's Mervin Jebaraj, economist with the University of Arkansas Walton College of Business. He's the director of the Center for Business and Economic Research as well. Mervin, thank you for your insight as always.
Thanks for having me.